Whenever you're day trading, you are simply looking at history as it's happening. You don't know where the market's going to go, but you have to create a plan, an idea based on what the history of the market is showing you in that moment. This morning, we had a huge move up. We knew that there was a massive gap on the QQQ. We knew that. But why was it so hard to execute a short on the NASDAQ today and not make massive profits, knowing that there was a massive gap there on the chart? We're going to talk about this and also how this all played out right here in this video. So make sure you stay tuned. What's going on, guys? Patrick here. Today, we're taking a look at the NASDAQ, and I want to talk about this kind of mental trickery, right? What does the market do every day? It basically makes moves, and then we have to figure out what we're going to do based on what we see. So this morning, like if you just get rid of pretty much like the open, we have this big move up. We have this big gap in the chart, and we're like, man, there's no way this is going to go higher. And then the market opens and it starts pushing, it's pushing, it's pushing. So, you know, at this point, we're like, well, I'm not going to get long here, right? It's too overextended. I'm not going to do it. And then guess what? It goes higher. And then it gets up to here, and you're like, well, I'm not going to jump in there. It's too overextended. So at this point, it's now 10 o'clock. You've been looking at the charts for 30 minutes. You have not taken a trade. And you're like, oh, well, you know, if it breaks out through here, I'll get long. Like if it pushes through here, at this point right there, I'll get long. You didn't buy here because you said it was overextended. You didn't buy here because you said it was overextended. And at this point, you know, 30 minutes later, you're finally going to take a trade. Like you're finally going to take a trade after it's now broken through these levels and you have convinced yourself. The market has convinced you that you should get long because guess what? It's only going up, up, up. But what do we know? We know that the gaps love to get filled. We talked about this on the live stream as well. You know, obviously, like I didn't pull the trigger. I was, again, like basically tricked by the market here because my disbelief that this can't go higher, you know, the higher it goes, the less disbelief I have because now I'm like, well, it just keeps going higher. So, you know, at this point, it might just keep going higher. Like it's just going to go higher and higher forever. You know, I wasn't going to buy here. I wasn't going to buy here. I wasn't going to buy here. I wasn't going to buy here, but I'm definitely going to buy here. You know, after basically convincing myself 4 times to not buy, I'm now sitting here going, well, you know, maybe I'll get long. Finally, I'll get long. It's went up 100 points. I'm going to get long finally. And that's what most day traders do. I've done that. You've done that. If you're watching this video right now, I guarantee you have done that. So what is the real play here? Like, how do we really see where the market's going to head? Nobody knows for sure where the market's going, but we can create reasons to why we believe the market would pull back. We can create reasons to why we think the market could go higher. And we want to basically have a plan. And we basically want to have a plan to, if that happens, how will we interact? Like, what will we do if that happens? So we had this pullback right here. We kind of talked about it on the live stream, this like pullback in here. And then people were like, well, you know, I said, like, there's no point in getting long until we kind of show some strength to get above that 500 level. Like, there's just no point in getting long. We saw on the book map, there was that big seller at 500 all morning long. That 500 seller was there literally at like 9:15. We saw the liquidity and we knew that there was something going on with that 500 level, which right now, that 500, you know, seller is sitting pretty. You know, he took profit probably down here in the 355s, whatever. But in general, we see, okay, we draw all these lines and we're like, okay, we're not going to do anything until we get above kind of this 500 level. And then we show some strength and then maybe we get a breakout. But we also talk about this, like somebody asked in the chat, like, well, when do you want to get short, right? Like, when would I want to get short on this move down? Well, if I know that the 500 level is kind of a key level for me to get long, well, there's no reason for me to get short, like right here. There's no reason to get short right there. You know, like there's no reason to get short here yet. So we basically have this trend. We get this kind of fake out. We push up the 500s. We get denied. So obviously in hindsight, you know, now it's like, well, obviously I should have went all in at 500. I should have went short at 500. And look at this. So again, it's like, we know the market is constantly creating this like false narrative, right? It tells us that we're like, oh, I don't want to get long. And then the market goes higher. And then finally it convinces us to get long. And then the market dumps. So it's a very kind of interesting situation because from a human emotional standpoint, Like you can be right in the beginning of the day. 9:30 a.m. You're like, well, I'm looking for a short. Okay, you're looking for a short. You're waiting for kind of like a lower high. It keeps pushing. You're like, oh, I'm not going to get short yet. I'm not going to get short. Okay. And then finally it's up here. Like, well, I'm not going to get short ever. I'm now going to get long. So here's the thing. Like, why would I get long when I know that we just got denied at that high, right? We basically put in this lower high right there. We can see lower high. There's no reason to get long, knowing what we know, that there's a big gap in the chart. We have made a massive move to the upside. We saw that 500 level there, that liquidity acting as a magnet. Guess what? We get up there to that 500 level, and then afterwards, there's like no more liquidity above it. So we're like, well, okay. So we basically need to tell ourselves, like, while this is pulling back, like we want to see something happen, right? We want to see the market do a certain thing, and then we're going to react when we see that happen. So I was also very like adamant about this VWAP area. Like we were about 100 points off the VWAP when we were up here at the 500s, you know, and I'm like, guys, that VWAP's down there. It wants to get touched. So again, like there was just really no reason to get long up in here, knowing what we know. You know, the market moves in waves. But the problem is, you know, emotionally, the market convinces us to change our bias. Like we're short bias, and then now we're long bias because the market's now made this massive move up. And at this point, I'm like, well, I'm going to get long. But the thing is, like, how do we avoid that? Well, we just wait, right? Like we just wait for things to happen. Like we're reacting to things happening. So this is kind of a perfect setup here. We kind of push back up into that 500 level, and guess what? We got denied. So we know that there's no reason to get long here because now we're getting denied at that key level. So if there's no reason to get long, well, then there's probably a better reason to get short. And you can see how basically, again, little pushback up here, this whole area right here, just load up short, and look at this move. We were kind of looking for that move down to the 40s. We got down there at 42, and then this pushback up right here, again, a really good spot to get short. You know, would you say that this is the best spot to get short, or is this the best spot to get short? You know, it's always coulda, woulda, shoulda, obviously, but I would say, you know, the second lower high here is probably the most reliant, you know, safest place to get short at. Because this first one, you're like, you don't know for sure if it's going to be a lower high, but you see it, it's happening. Like you can only see it in the history of it, you know, in the past. So now you're like, well, I'm going to wait, kind of look for that next lower high. So here's that next lower high. Here are the 75s, and look at this move down, about over 100 point move down. And this was just a waterfall of a move. Like there was just no reason to be short. There was just no reason to be long up in here. You know, I wouldn't even be long above this level. Like as long as we're pretty much interacting the way we're interacting, like this is, like if you look at this, like this right here, this is not a bull flag, right? Like this is not a bull flag here. This is a bear flag. You know, the market moves down, it pushes back up, more shorts pile in, then we get to the break to the downside. There's a big difference between a bear flag and a bull flag. You got to be able to understand that, yes, like this is a bear flag. Look how it convinces you that this is the bottom, right? You're like, oh, look, it's pushing back up. Okay, I'm going to get long here when it breaks out. And then guess what? It sells off. There's a big difference between a bear flag and a bull flag. All right, so like this here is a bull flag, right? Like this is a bull flag. Look at the difference, right? Are you guys looking at the difference here? Look at how this is pulling back, right? It's pulling back, but it's holding this kind of level here. You know, not the best bull flag ever, but still, like it's holding that level, you know, bang, 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 pulling back. But then look at the difference here. It's very different, right? Like this is a very different setup. You're seeing it like, well, it's, you know, it's pushing back up, Patrick. Like I want to get long, right? Like I want to get long, but no. All this is doing is just pushing back up. The dumb shorts are getting squeezed, and then boom, they dump it on down. So, you know, where's your entry at here? Well, your entry obviously is the breakout of this bear flag. So you're like right here, look at that thing. You draw your line, you draw your flag, and rip to the downside. You know, I'm not here to sit here. You know, I'm not going to sit here again, look at this. Another bear flag forming down here. It's almost like funny because these bear flags try to sucker in more bulls. Like we need more buyers to basically buy up here, so then we sell to the downside, right? When you're looking at this, you're like, well, it's going to put a bottom in here, but really it's just suckering in more long so it can dump down further. Like that's really the way to think about it. You know, if you look at like the 2-minute chart, it's a little cleaner to see. Again, like look at the difference between this and this and then this. Like look at a bull flag and then look at a bear flag right here. All right, we got this big move up. Here's your bull flag. Do you guys see the difference here? Do you see the difference? I think if I get rid of the indicators, you can see the difference here, right? I think everybody sees the difference. Pretty simple. This is a bear flag. This is a bull flag. Bear flag, bull flag. But look, it's deceiving. It really is deceiving because a bull flag looks bearish. A bear flag looks bullish. Isn't that kind of funny to think about? Like the bear flag literally looks like, oh, this is a reversal. The bull flag looks like this is a reversal. The opposite way, right? You got this big move up. Now it's pulling back. Okay, it's going to keep going lower. No. Here it's like, look, you got this big move down. It's pushing back up. Oh, it's going to keep going higher. No. Like on this right here, you're looking for a pushback up like to the VWAP and then kind of that break to the downside. Then you got that pivot point down there. So it is very funny because a bull flag looks bearish. A bear flag looks bullish. Bear flag, bullish, bear, but you know what I mean? Like the difference, like from a human eye looking at this, you see it like, oh, it's a bear flag, right? Like it's kind of funny to think about, honestly. Like I literally looking at it, I'm like, huh, I never really thought about it that way. But from like an overall like human thought process, if you look at this from like a bearish or a bullish standpoint, kind of looks convincing that this would be, you know, bearish and this would be bullish. That's the way I look at it, really. Like at the end of the day, we're looking at it from a very simple standpoint. You know, the market is basically convincing you to get long, and then it's convincing you to then get short. And guess what? Like you get short when the market reverses, you get long when the market reverses. It's constantly convincing you to do the opposite of what the market's actually doing. The price action is constantly basically convincing you to do the opposite. It's kind of funny, like if you think about it. The price action is literally just a distraction, really. Like when you're looking at the chart, look at the indicators, you're like, huh, this is all very deceiving. The market's always deceiving you, right? That's the best way to think about it. Like the market is literally just always deceiving you. Like it's basically convincing you to do the opposite of what the market's actually doing. So that's why day trading is very, very difficult, because from a overall just like simple idea of the market going up or down, when you look at it, you're like, well, this is going to go back up. This is going to go back up. This is going to go down. This is going to go down. It's like constantly giving you these signals to basically convince you to take a trade when you're not supposed to take a trade, or you take a trade the opposite way of the market moving. So there it is. Day trading. It's hard. It's not easy. If you want to learn more, hit that like button, subscribe button. I'll talk to you guys later on.